everyone. So we're talking to a lot of clients who are seeing these low rates and are looking into refinancing with us. Most of our clients take our advice and jump on locking when we recommend it. We're watching the market, and based on economic reporting, sometimes we suggest waiting a day, and other times we recommend that they lock right away. As a general rule, interest rates change daily, but in today's environment, they actually fluctuate throughout the day. Rates have been like a whipsaw, with large swings up or down based on information that you may not even be privy to because mainstream media doesn't always report on it. The good news is that we do this for a living and we're mortgage professionals, so it's our job to monitor the market in real time. We subscribe to services that give us notifications on things like market volatility, gives us a heads up when news is expected, and the effect that news may have on mortgage rates. Subscribing to these expensive services is one of the many things that we as mortgage brokers do to be the best advisors possible to our clients. Being well-informed helps us to educate you, and in many cases, it makes the difference between getting a loan or not. So at some point, rates will hit their lowest point in this cycle. Is that today, tomorrow, or was it yesterday, and do we just not know it yet? A client that locks in today gets immediate savings that they can use at historically low rates. A client that waits for the extra $20 or $30 a month in savings instead of taking the $200, $300, or even $400 savings today could wind up losing out completely if we see that whipsaw market change I just talked about. I have seen this happen more times than I can count in my 23 years in this business. We do expect at some point there will be a vaccination to COVID-19, or maybe even a cure, or perhaps just talk of a vaccine, or maybe some other really positive news to the economy. When that happens, we will see a lot of money flow into the stock market, and in turn, that will cause money to flow out of the safety of the bond market. And as such, mortgage rates will be pressured and you will see them spike. When I say spike, I mean dramatic. One day, 1 hour, we will see the historic low rates in our rearview mirror. We will know that the bottom was in the past. Do you think the person that locked will be happy? Of course. Do you think the person that thought holding out for $30 a month in savings will be upset? Of course. The lesson here: listen to your mortgage advisor. Always take the bird in the hand. If it turns out that rates continue to go lower, you can always analyze another refinance in 6 to 9 months and reap additional benefit. Just another tip for the week here at AmeriFund. Everyone stay safe and take good care of one another.